Hey, welcome back, everybody. Time once again for another episode of OC Spotlight. The one show, the only show that shows you the most incredible people doing the most amazing things right here in our own backyard. And today, we're going to learn something about something I think I should know, but I just don't seem to know. What is an investment banker? We're going to talk about that here today with one of the bigger and better ones from up in the LA area. Happens to be down in the area today. We grabbed him and said, let's do an interview. We're here talking with David Herman, who is the managing partner for a group called Diamond Capital Advisors. Welcome, sir.
Thank you. It's a pleasure to be here.
Well, you normally are based where? Up in LA somewhere here?
Yeah, we're in Century City. We've got an office in 1875 Century Park East.
Is that one of the big towers there?
It's one of the big towers. It's not the biggest tower, but
Okay.
it's a really nice building. We've been there since 2008.
I just got to go down a rabbit hole for a second. We do a big show on commercial real estate. Now, talking about the collapse of downtown office towers and other things, and they're going back to the banks and all stuff. But the one area that's not is Century City. Yeah, that is booming for some reason. Why is Century City so hot in real estate here? Proximity, location, I guess. Here.
Well, it's also it's out of L.A. downtown.
Right.
And it is...
Which intimidates people, homelessness, and hard to get down, in and out, everything.
Absolutely. Also, there's density. It reminds me a lot of New York City's density, where you can go out to lunch and bump into 5 people you know.
Yeah, right.
And that kind of density encourage commerce.
Yeah.
And stimulates commerce. And not only that, but the density also is camaraderie.
Yeah,
and people
exactly.
feel comfortable with people they know, and they walk around and they meet them, and they go to lunch, they say, hi, how are you? You know, so on. And it's not like having an office building in the middle of nowhere where you don't really meet a lot of people.
Down here, we're in an office building, we're in an office research park, but yeah, you don't run around and bump into people here.
That's right.
You get in your car and you go somewhere.
I love it there. It's been great.
Well, I smile because years and years ago, I worked for an entertainment PR firm. I think he's still up there, Stan Rosenfield. He was one of the great PR guys. That's how I started my life 100 million years ago. He handled Danny DeVito and Robert De Niro and people like that. Anyway, I think he's still up in Century City now. Sure. Been a long time since I've been up there. All right, so you're down here in the open OC, and we grabbed a hold of you and said, we want to talk, because we're at the UCI Research Park. Everybody's here is trying to come up with some gadget thing, whatever. And they all hope to raise $200 million. And that's their whole entry strategy. But your strategy isn't just so much about raising money as it is what? Selling businesses?
Selling businesses. Companies come to us when they want to sell their company for the highest possible price.
Okay.
That's it. You don't hire an investment banker unless you want the highest price.
Okay.
So if you just want to sell your business
to your friend,
to your buddy,
yeah,
don't hire us.
Right.
Waste of time.
Right.
So we're not consultants. We do not help businesses get better. We do not help businesses get more sales. We don't help businesses get more profit. What they do is we make sure that they're involved in a very aggressive auction process that sells their business for the highest possible price in a given environment, whatever that is.
And so that's what an investment banker typically does?
Whether it's Goldman Sachs or Diamond Capital, the investment banker basically puts the company up for a very sophisticated and aggressive auction.
Okay.
And it goes to many different buyers. And the idea is to create competitive tension.
Right, exactly. Right.
That's the idea of any auction.
Scarcity. Somebody else wants it. I better get it before they do. Yeah.
The thing that most business owners don't understand is that their company does not have a price. They think they have a price.
They have a price in their head, probably.
Wrong.
They might.
Wrong. It's the wrong price.
Yeah, exactly.
Because that price in their head cannot buy them a boat. It can't buy them a house in Montana. It can't buy them a vacation. Or it can't give them generational wealth. What we do is we provide that price in the form of real money. And so
the hypothetical into the actual here. Right.
Exactly. No matter what the business owner thinks his business is worth, or anybody tells him it's worth, even us, when we tell them it's worth something,
Right.
it's not.
Exactly.
It is an imaginary price, because what they have is a scarce and illiquid asset that is totally unique, that nobody else has, and it's impossible to price.
So let's break that down, because so many times I do hear people say how to price your business and what your value, particularly at the early stages, which is when it's really a fantasy. Nobody knows what it's going to do here. But there's trying to figure out a price and evaluation so they can determine what the stock price is and how much the investors get. How do you do? Is it just based on sales?
No.
Or is it other intangible things like the brand? And if so, let's talk about what that brand means. What is a brand, and how does it? I mean, I think I know, but I'm going to hear from your standpoint. From a dollar standpoint, what is a brand?
Okay, so let's back up just a little bit.
Okay.
Most companies who are established, and I'm talking about all of our clients, because all of our clients have profits of at least $2 million.
Okay.
They have profits of at least 2 million, profits,
Right.
not sales.
Right.
Okay, so let's break that down. So the typical way to value a company that's established is to take those profits and add back a bunch of things that the business owner takes out. And the business owner takes out every business owner I know. They take out a trip to Hawaii. They'll take out their cars. They'll
Right.
take out, they may even have an aunt or uncle on the payroll
Right.
who's not working. Any number of these things, these are called add backs.
Okay.
And what we do is we add them back to the profit, because the new owner is not going to have those expenses.
Then I could put Aunt Minnie on the payroll here.
They're not going to do that. And they're not going to put their 5, Rolls Royces or whatever the guy's putting through. One of my clients had an airplane on the thing. Really, an
Wow.
airplane.
The company owned
Okay.
the airplane.
A company owned the airplane, okay? And he would drive the airplane. Another one of my clients, a really nice woman, I loved her. She's like 30 years old or something. She had a tahini company that made tahini. They make it from the seeds, and it's not
the whole spice.
Yeah, exactly. It's really a terrific product.
Tahini is hot, and I don't say that in a bad pun, but it is hot these days. Right?
It is hot these days.
Right.
She put an entire swimming pool and the landscaping on the business.
Of course.
And obviously the company didn't have a swimming pool in their backyard.
No.
Okay. And
Wasn't an employee swimming pool they could use at lunchtime. or
no,
something here.
that's an add back.
Right.
So we add that back, and now we come up with a number. That number is fairly factual. Consider that a factual thing. People can disagree,
But do they have to have? Now we're going to delve into some of what you got to show people to prove that number, because a lot of people, the number is what I say it is. I do it on my napkin, or no, I have actual audited financials, and I can prove some of this stuff here.
Well, there's 2 ways of doing that. First of all, there's something that we call a quality of earnings. Okay. That is something that a consultant who comes into the company before may advise the company to do. And what that is, it's an audit on that number, and call that number EBITDA. Okay.
That's the term I hear all the time, which I
Okay.
forgot what all those letters stand
I'm
for.
going to tell you.
Earnings before something.
Yes, exactly. Earnings before interest, taxes, depreciation, and amortization.
There you go.
There's the EBITDA. It's basically a long-term, irrelevant, it's just free cash flow. Just think of it as free cash flow.
Okay.
That's it.
That's the easiest explanation I
Easiest.
ever heard. Right.
It's just easy, and every buyer knows the term. Every buyer uses the same
Formula,
metrics to
right.
figure it out.
Right.
So it's
I've heard it a million times, and I always forget what it is, but I know it's a critical figure, and they all say, well, what's your EBITDA? Just tell me what your profit was. What's your EBITDA?
exactly. So you do know something about this.
little bit.
Yeah, I got
A little bit.
enough to be dangerous.
Exactly.
I got it. Okay. So here we are, and we got this fact. This is a fairly good fact. Now the buyer is also going to do a quality of earnings. You're going to do it, and the buyer's going to do it. and the buyers may be a little off, but it's not going to be that far off.
Okay.
Okay, so let's say this is a fact, and let's just say, for argument's sake, it's $3 million.
Right.
Let's just say, for argument's sake. Okay, so now you have to have a multiplier on that.
That's what I was going to get at.
Okay.
Years and years ago, I had a bar, a million years ago, and I wanted to sell the bar. And we did $1 million gross, whatever.
Right.
I forgot what probably only 10% of that was profit or something. Bars were so
Exactly,
low.
that would have been right.
And then we wanted to sell the thing, and it was all over the place. What's a multiple of? And so then we go look at other businesses. We had a very unique business, and I don't think they could find something exactly like it. So with was it 1 times gross? Was it 2 times net? We had 1,000 different theories of what we should offer it for.
Yeah. So in this case, the multiple is, again, a very subjective number. That's not factual.
Right.
And every
Exactly.
buyer is going to put a different multiple on that business on the same fact.
Right.
Okay, the fact of EBITDA.
Right.
But they're going to put a different multiple. One buyer is going to see, oh, there's great opportunity. I'm going to put a 6 on it.
Right.
The other guys are going to say, oh, I got too much work. I'm going to put a 4 on it.
Right.
And another one is going to say, because of the brand and because I got salespeople that can do better, I'm going to put a 7 on it.
Right.
Everybody's different. However,
That's 7 times whatever that number is. So if it was $1 million, you said $3 million or something was EBITDA, they'd give you 21 million.
Exactly.
7 times. Right.
that's exactly right.
Okay.
Okay.
And that's what now we're getting into the art of the deal.
That's right.
This is not, there's some sort of determination of what's this business really worth. And here's my numbers to show it. You're going to look at your numbers. We're going to subtract, we're going to add, we're going to do all this stuff. But somewhere we've got to argue and find out a common basis. Then the real haggling begins, because it's a guess. It's how much do you want this business, and how much do you think you got to put into it, and where do you think it'll go?
Well, let me throw in another factor.
Oh, okay.
Okay. Competition.
That's true.
Okay.
That's true.
You don't want to lose. In an auction, you don't want to lose.
No.
That's the whole idea of an auction. The perception of an auction is even more important than the reality.
Let's explore that, because I can believe that it's scarcity. It's I got to get it or someone else is going to. If you just called me and said, Paul, I got a business for you, and I'm sort of in the market, I'll look at it, but there's no urgency. But if somebody else is looking at it, now it's turned into an urgent thing. I got to make a decision, or this opportunity might go.
Right. And that's what investment bankers do.
It's
Okay. We are in the auction business. We conduct, and myself and all my competitors,
right.
we conduct the most sophisticated.
But you don't really have any competitors. I mean, you're really one of a kind. So the people who think they're competing with you. Right?
Yes, that's very kind of you. I think we happen to be the best in our market,
Of course.
and our market is deals under $100 million.
Okay.
So that's our market. It's 10 to 100 is our market, and our market extends all over California.
And would that be, what do we call that? Typical kind
That's
of
the mid-market.
SMB, small to mid-size?
Yes,
Right.
exactly right. Small to mid-size market, deals under 100 million, and that's our specialty.
Mm-hmm.
And so what
As opposed to who you read off some big names.
Yeah.
They want to sell, the Lakers or Disney or something.
Oh yeah, anything over 100 million, there are firms in town that would take that in a minute.
Right.
Houlihan Lokey would be one of them. Duff and Phelps, who now owned by Kroll, would be another. B. Riley.
Did you work for the first one?
I did. I worked for Houlihan Lokey for 5 years. It was a very good time, but I'm not a very good employee, and so
Me neither.
I started my own firm. But the key of this is to create the perception of an auction, and
Right.
that's what we do.
Others
That's why
are
you
looking at this. There's is it just, am I overstating it, just to create a sense of urgency, a sense of competition, a sense of scarcity? This may go to move people off the dime and get some other interest and some other offers?
Well, let me put it. This is a 10-month process.
Wow. Okay.
Okay. It takes, first of all, you create a very sophisticated and a very a sales-oriented book for the company.
Literally a book.
It's literally a book. It could be 60 pages long.
Wow.
Okay. It's now everything is email and it's digital.
Sure,
But
but-
it used to be a actual physical book.
Okay.
Okay. When we sold LA Magazine, we actually had a physical book and we made it look like LA Magazine, so it would be very attractive.
You guys were involved. Wasn't that MS Communications?
There was the guy up in the Midwest somewhere. Owned it.
Exactly.
And
he had bought it from MS Communications. I forget, in Detroit or something.
yeah, somebody. He was out of one of those Midwest places. It was a few years ago. And
Yeah.
we sold it to a litigation lawyer here in town.
Interesting. The only reason I know that because they also owned Orange County Magazine. Or
That's
Oakland
right.
Magazine.
They did. We
And-
sold them both.
Yeah.
They
exactly.
sold them both to the same person, but we created a book that looked like them so that it would be very attractive to the buyers. And then we had another company. We made the book look like that, a physical book. But most of our books are now digital. So to create the book, that takes 6 weeks or so.
The story of what
The story.
Yeah.
You got to tell the story, and you got to tell it really aggressively so that the future is beautiful. The future's always great. Okay,
Exactly.
look, auctions. The only people that go into auctions to buy things are optimists.
They're not pessimists. No, I don't know if this is going to work out. I'll give you $7 million for it. I'm not sure.
That's it. We want optimists. We want optimists that don't want to lose.
And what is it about everybody who this at least was in my bar case? We were okay. I won't say we were a hugely successful bar. We could see we could do more food. We could do other things. And we probably should have more locations because then we could have bigger buying power and other sorts of things like that. But we couldn't go there. So I could see some upside. But everybody who came in, they just thought, oh, my God, we're sitting on a gold mine here. And I'm like, really? I don't know if it can go that far. Is it something about the buyer that just thinks they can do better than the guy who built the business?
Always.
Yeah.
And that's our job.
Yeah.
Our job is to whisper in his ear, you can do better. And this guy's out playing golf 3 days a week. This guy is, or this woman.
Too old.
Is too old.
Doesn't want to put enough into it.
Exactly. He's made so much money already. He's got 3 warehouses.
Right.
He's
But
whatever.
you, with your knowledge and your financial backing and your plan, you could take this even farther, and hopefully they do.
And not only that, but there's synergies between the buyer and the seller, and the buyer takes advantage of those synergies
Right.
and doesn't necessarily have to pay for all of them.
Yeah.
In other words, he sees great opportunity, but he's only paying for a fraction of that opportunity because it's not realized anyway. Remember, there's no value until somebody actually makes money.
Yeah.
Okay.
Exactly.
So we can value the business any way we want, as going back to your value issue. But until the buyer actually is willing to write a check, there's no value to the business.
So your job is to find just that, to find the sweet spot, the story, the and do you have to demonstrate to somebody? Do you have to open their imagination and say, what if you did this? Or how about if you did this? Or do they just see it themselves? You just say, here's what it is. And then they use their skills and imagination and background to say a little more of this, and it could be even bigger.
It depends on the buyer. Some of the buyers are so smart that you don't want to interrupt their thought.
Right.
Okay, they're doing great. Don't
Don't
mess
derail
with it.
them and say, well, what about this? Oh, I never thought of that. Oh, wait a minute. Yeah.
I don't want to do that. You got some buyers that are enthusiastic and they know the business really well, and you can't tell them anything. You shouldn't.
Right.
And you have other buyers where you really have to educate them a bit.
Yeah.
Okay, on this thing, and so
We have that problem down here with the UCI, I hear all the time, because we do mostly medtech. And the people who buy medtech businesses are a very specialized group. It takes 10 years to get through the patent process.
Sure.
And clinical trials and everything. You got to understand that process and what you're buying. It's not something you can turn and flip.
Yeah.
Or build it up and flip it in a couple of years. And I think that restricts the number of people who invest or buy these businesses down here. You have to have some background in it.
yeah, well, we don't. What we do is we spend a lot of money on databases, and we could make 150 phone calls and send out emails to get 20 people who are interested, 15 maybe.
That's what I was going to ask. You don't
Okay.
just wait for them to. You don't just throw up a sign auction today and here we go and start the process. You go out and seek people who you think might fit this profile.
Absolutely. This is a very sophisticated process with timelines and deadlines for the buyer to put in bids, put in a second bid, to meet with the management. And
So
then,
much time to do due diligence and what can't spend forever looking at this. And
exactly. And there's a virtual data room where all the buyers have access to the same information, because you need every buyer to have the exact same information in order to have a really good auction process.
let's talk about the completion of it. And I know you're not involved in this deal, so I'll throw this out. But we're all reading about, maybe you are, Paramount Pictures.
Sure.
And everybody keeps saying, is it going to go to the highest bidder, which seems to be Netflix at the moment here, or is it going to go to the one with the most synergy or political clout, which seems to be the what is it, Skydance or whatever it is, the
Yeah.
Larry
Ellison.
Ellison's son, yeah.
Yeah.
And he keeps hanging in there, and they say no. The board at Paramount says no, we're taking this bid. And he says no. I'm sorry, what are they bidding for? Paramount or Warner Bros? I forget. Warner Bros. I guess they're bidding for here, and it doesn't always go to the highest number. I guess that's my point.
Okay, you bring up a really good point. In our auctions, unlike a lot of auctions, price is not the only consideration.
Exactly.
Okay.
That's what would have shocked me, because you're talking about an auction. So there's somebody won. I got the highest number. It's mine.
Yes. So most of our clients will go with the highest bidder because they want the most money for generational wealth.
Clearly.
Okay. But we also advise them on which client or which potential buyer has the best chance of closing. And that is, do they have the financing? Most of our clients have the financing.
Right.
And what has been their history in closing? In other words, do they change the price at the last minute?
Yeah.
Do they spend an inordinate amount of time on due diligence?
That's what they did on my bar at the last minute. All of a sudden, they're changing the price. Like, well, I thought we already agreed to this. Oh, well, I can't come up with that money. So how about this or something here?
That's right. That's exactly what happens in deals too. Same thing. We have a deal right now, and we're working on it right now, where 10 days before close, they changed the price on us, okay, and the terms.
And you scream and you pull it. You say, they can't do that. Yeah, they can.
Well,
There's no deal till there's a deal.
one of the reasons they can do that, and they have, is that we do not have a second bidder because of what the client wanted to just go with this one person, and we didn't have an auction. We really had what we call a one-off,
Right.
where we had only one buyer. We've worked with this one buyer for
private
over
sale.
6 months.
Right.
And at the last minute, they changed the price. On a typical auction, the way we run our aggressive auctions is that we always have a number 2 and a number 3
Yeah.
buyer, so that if number 1 gets difficult, shall we say, then we can go to number 2.
We do a show with a guy named Barry Saywitz, who owns 100+ apartments in Orange County here, well known on commercial real estate, and he's always talking about, I may not be the highest number, but I got cash.
Right.
And I'm going to close. So
That's
you
right.
can pretend that this person's really going to go find that financing and put this fabulous deal together for you. But when they don't, 6 months, you're going to come back to me. And you've lost all that time, all that money, effort, and maybe my deal is now different.
Exactly. And that's one of the things. We have another deal that we're working on, which is really interesting deal, where the number 2 buyer, and we did a real auction on this one, very aggressive auction, and the number 2 buyer has guaranteed the price when the number 1 buyer
Wow.
drops out.
Wow.
So he wants the business so badly that he's willing to guarantee it, but he's not willing to go up on his price. But he said, when your number 1 guy doesn't work out,
Right.
call me and I promise I will not lower my price.
Because
And I'll
that's
get
typically what they do. All of a
That's
sudden,
right.
they, well, now you want to come back as a new number here. Sorry, that was yesterday's number here.
That's right. So that's
I
an
think this
issue.
is fascinating. In the last couple of minutes, how in the world did you get into this? You're a little boy, and you said, "This is what I want to do: buy and trade businesses here."
No, I started out. I grew up in New York.
Okay,
Went to Washington University in St. Louis for undergraduate.
great school,
and-
great journalism school.
Oh yeah, great school. Loved it. Four best consecutive years of my life.
Okay,
Except of course with my wife.
Well,
I
yeah,
had
right.
had to do that. And
it took
I
him
wanted
a
to do
second to
that.
remember that one, though.
No, not really.
Okay,
And then I went to NYU Law School and passed the bar in New York and went into a family business that manufactured automotive parts. And so for 15 years,
automotive parts in New York.
it was actually in New Jersey,
Okay.
and we had 163 people, and we had union, Teamsters Union actually.
What did you make?
We made brake hardware.
Okay.
We made tools for cars, and we made.
I grew up in the car business, so yeah,
Okay,
around all
so,
that.
so
yeah.
you would know Lee and Gibson for brake hardware.
Yeah.
We competed with them.
Okay.
We sold our stuff to people like Pep Boys,
Yeah.
all the aftermarket outlets, and the warehouse distributors
Okay.
all over the country.
Great business.
It was a very good business. My grandfather started it in 1940.
Wow.
Then my father went into it when he married my mother. It was my mother's father
Right.
who had the business. And then I went into it after law school. And for 15 years, I was in the business, first in sales,
Right.
and then ran the business for the last 7 years. And we sold the two divisions. One was brake hardware to a conglomerate one, and then to a Wix bought the other division.
Wow,
And then I moved from New Jersey out here to look for a business to buy.
So you went through this same experience that all your customers go through.
Exactly.
This is a family business, a generational business, generational wealth, and for some reason you guys decided we're getting out of it. We're not passing it down to the fourth or fifth generation. Maybe because there was no fourth or fifth generation interested, or maybe because it was just time to sell and it was too hard to compete.
Time to sell.
So what did you not know that you wish you'd known now? Today's David should go back and talk to yesterday's David here. What would you tell him? How should he have prepared for that?
Well,
In addition to getting people like you.
well, the key thing is financial. The
I hear that all the time, and you think that's just a given. I already got my accountant at my financials, but they don't seem to have good financials or the right financials. I don't understand that one.
You don't need audited financials.
Okay.
But you do need accurate and transparent financials. That is really, really important. You'd be surprised how many businesses have just do their business for tax reasons, and that's it.
It doesn't really reflect the business.
It doesn't at all. The inventory is not completely accurate because once your inventory isn't accurate, then your gross margins aren't accurate, and then your gross profit isn't accurate, and nothing's accurate.
And I've heard that over and over again. For example, we had a guy, I don't know why this one comes to my mind, talked about sort of this process of selling. He wasn't an investment banker. He was somebody that came in, what did he call himself? The corporate undertaker, or he was the guy after the bank had bought it and discovered, oh my God, this is a piece of junk, and it went bankrupt, and he had to go in and evaluate it really was. And he would say, they told us the shoes were great. The shoes were 40 years old.
Yeah.
They were yesterday's shoes. And so they had a valuation that was totally inaccurate on this inventory or whatever. Is
Yeah.
it that kind of stuff?
It's
Yeah.
that kind of stuff, and so that can inventory needs to be accurate. The books and records have to be accurate. That was something that we did not adhere to, and that took a lot of due diligence, and it did change the price a bit.
We had another guy years ago. Sorry to keep giving examples that pop into my head. I can't tell you the name of the business, but it was something with lots of millions of little parts.
Yeah.
Not a hardware store, but something. It was like they carried 500, 600 parts of something that went into something here. And this is where you would go get that little transistor, the little thing or whatever. And they went to sell it. And they didn't really know how many of those little tiny
That's
widgets
right.
and transistors they had. Really didn't know.
No.
They sort of thought they did. We bought some, we sold some, but when we went out in the warehouse, where are they? They're not really here. Nobody had ever taken the time to count the 500 bins or the 500 SKUs of little widgets.
Yeah.
And so they weren't really there, or there were too many there, or there were the wrong ones there, whatever. Yeah.
Yeah, those are there's many things
Got
that
another guy in the studio who's laughing every time I say this stuff here, but I hear these kind of stories that the stuff isn't really there. The inventory doesn't really reflect reality here.
no that's a big thing. I think that that we actually did a fairly good job of preparing for sale and selling the company. We had a consultant that helped us out, and he wasn't quite an investment banker, but he was really good, and he knew all the buyers that would eventually buy the company.
And who are
And
these people? Accountants or lawyers?
these are usually these consultants
Yeah.
that are usually
We did a show with one for years. I still don't know what his background was, but he was the exit coach, and he would
Yeah.
help you get ready for an exit. And it
Yeah,
took a couple of years, he said, to figure
Yeah,
it
it
out.
does. It takes a couple of years to do, and by the time we get there, it should be fully prepared and
Right.
ready to go to market, and ready to participate in an aggressive auction with
Right.
very little disputing
Yes.
of whether it's inventory or whether it's partnerships. Sometimes partners fight with each other. Buyers don't want that.
No.
They want that settled. Whatever it is, settle it.
Right.
Okay. We don't want to buy a problem.
No.
There's
By
enough
litigation here.
there's enough risk in buying a business without any additional risk.
Yeah.
So
exactly.
whatever risk you can take away from the business before you sell it is going to reflect in a higher price.
Because it's like selling a home. There isn't much. It doesn't take much to have somebody walk away. Say, I'll go find another one.
Exactly. The only difference is with businesses that we sell, they are unique. They don't come into the market that much.
Right.
So if you're looking for a plastic bottling company,
Yeah.
or you're looking for a
bakery or
bakery or something like that, there's not that many on the market
Right.
that are this size.
something. And they rarely do come on the market. There aren't many to begin with, and they don't come up for sale very often.
Exactly. So the idea that we have that in our firm and what we do in the auction is keep repeating that over and over again. This is a unique, rare asset that you can really build with, because our guy is out playing golf.
Yeah,
He's in his
exactly.
house in Montana. He's
Exactly.
fishing. He's doing something.
He's done. He needs what you got to take it to the next level. Energy, money, capital, vision, something here. He's ready to. He's taken as far as he can go.
Yeah. So one more thing, you would ask me how I got into this business. I
right.
wanted to back
Oh, yeah,
into
right.
that. Okay. So what happened was, when I got out here, because my wife lives here, or my wife is from here,
Right.
and so we all go where our wives tell us to go,
Isn't that the
and
truth?
that's good. And so she said, "I've had enough of New Jersey. I want to be here in L.A. because it's beautiful and
Right.
it's sunny, and New Jersey is cold and it's miserable.
And it's New Jersey.
And it's New Jersey.
Right.
So we came out here, and we had two little kids, and I was looking for a business to buy, couldn't find one, so I got attached to a guy out here that does what I do now. And he says, "Look, work with me for a year until you find something."
That makes sense.
Well, we did a bunch of deals. It was great. I loved it. I said, this is for me.
This is the business.
I love
Right.
this business. This is terrific. So I started my own firm called Chelsea Capital a year after that, and then I sold it to Houlihan Lokey. And then
Again, selling it here. You've done,
yeah,
you've done
again,
this a
another
couple times.
sell.
Right.
Sold it to Houlihan Lokey, and that was great. Worked with them for 5 years. Then I left them, and I bought a cosmetics company.
What?
And yep, I owned a cosmetics company for 4 years, and it was great. I really loved the company. I got an unsolicited bid to sell the company, and
Those are the ones we all dream of. Somebody just walks
know.
in and says,
says, "I really want this company,"
Yeah.
and they were willing to pay more than I thought it was worth, and for him, it was worth what he paid for it. People don't overpay for businesses. They pay what they think
Of
they
course.
can do with the business.
that doesn't mean they don't really overpay, but in their mind,
In
they
their
don't
mind,
overpay.
they don't overpay. So he paid for the business, and I got out of it, and then I got back into investment banking after that.
And here you
So here I am. And
You still on the hunt for another business?
No.
I got a radio station.
No, I'm very happy. I got 9 people that work at Diamond, and we really have a great firm and great people and I enjoy working with them, and I enjoy doing deals.
Well, I would love to have you come back if we ever could find the time to talk about those deals. How deals get done is an art in itself. How you find the buyers, how you convince the buyers. Is the regret afterwards? I read about litigation. Oh my goodness, I got buyer's remorse. Why did I do this? I want my money back. You cheated me, or I didn't know, or whatever. It is not a straightforward process. At least it doesn't seem to be. It's a world I don't understand. The world of deals like this, how you buy and sell businesses. This is more than just a business broker. What's a business broker do then? I don't know what a business broker does.
It's a very good question. A business owner is different than an investment banker. A business broker usually works on smaller deals.
Right.
They would be deals.
That's what we hired, a business broker.
Yeah, that's right. And a business will work on deals maybe from 1 to 10,
Right.
let's just say.
That was us.
And there's some of them work on bigger ones, but usually, generally, it's lower. Their process is totally different. It's not a sophisticated auction. What it is they put the business on various websites.
Exactly.
And those websites then attract an individual, usually an individual, not a company,
Right.
not a conglomerate, not a private equity group that we sell to. They would attract individuals, and that individual would look at the business, and there would be a write-up on it,
Right.
and they would bid on the business.
Right.
And if the owner liked the bid, they would do a deal. If the owner didn't like the bid, that buyer would go away.
Yeah.
And there'd be another buyer.
Yeah, it was sort of like a
2
real
weeks later.
estate broker to me. He just put a sign or he put flyers, and I know it's more than that, but whatever
It's
he
more
was,
than that.
he put it out to the world that we're available, and you contacted him, and he started the conversation.
That's
and then
right.
it came to us, like a real estate broker would say, hey, I got somebody interested in your house. Here's the deal. And yes, maybe he'd prep them and talk through them and try and excite them, but he was just really the intermediary.
Yeah. It's really just it's a one bid, then we go to the next bid,
Right.
then we go to the next bid. Whereas what we're doing is an auction. We're like Sotheby's for businesses.
Yeah, that makes
Just
sense.
think of it that way.
I like
Think
it.
of Sotheby's for businesses as if you were selling a Monet painting.
Right.
Instead of selling a Monet painting, you're selling
Collectible car or
a,
something.
a business.
Exactly.
Okay. And so we have a real auction with real timelines, real deadlines, and very much competitive tension.
Well, we have a real deadline here that we've gone over. It's a fascinating conversation. Thanks for coming in. How do they reach you if they want to find out more about Diamond Capital Advisors here?
Well, you can reach me at dherman@diamondcapadvisors.com, or simply call 310-432-8585.
And don't wait to the end to call them. It sounds like it's better. Will you do consultations and talk? I'm thinking of next year,
Absolutely.
2 years, 5 years
Oh,
later.
absolutely. We'll be glad to do that. Not only that, but for your listeners,
Mhm.
I will do a free valuation.
Oh, no, come on.
Absolutely.
You really are a good guy here.
I really a free valuation
what,
for
'cause
all of your listeners.
I think of that, folks. People listening out there. I know, just like me, we're all sitting here saying, "Well, someday, one day, what am I going to do with this thing here?" Find out, see what it's worth, get an appraisal, and see where you're at in the process here. Because I don't think most of us. I know most of my friends who own businesses, probably in that price range. We're in the low end, the 1 to 10 million range. We really don't know what we got, and we really don't know what to do with it. We just know how to do the business.
Yeah.
And that's where people like you can come in and help us. Thanks so much. Diamond Capital Advisors. Diamond Capital Advisors. What a unique story. Hope to have more conversations with you down the road here.
Be a pleasure. It'd be a pleasure. Thank you very much.
Well, there you have it. There's a world that most of us don't really understand. We're all kind of tipping-toeing around it here. What's my business worth? Would anybody buy it? Maybe I want to buy a business. Well, these are the kind of questions we explore right here in Orange County's only community radio station, OC Talk Radio, streaming live from our studios here at the University of California, Irvine's Beale Applied Innovation Center.